Travis, today we're going to talk about what to do after this most recent Fed cut. We've all heard the narrative, and we've had many capital exchange videos about the Fed increasing rates and how borrowing is expensive and cash is now finally paying, and how housing's just stuck in a rut. Our brains love familiar stories even after the tide shifts. Now, talking about rate decreases.
Right, yeah. So, I mean, rates just move, but sometimes consumers, it takes a while for them to catch up.
Yeah.
And, that gap between, what's really happening and what they think is happening can cause mistakes, thinking your cash is earning more than it's really earning in banks, or maybe you're not considering refinancing your home if you locked in a higher rate, when rates were at their highest, just to get in the homes, right? Because it was a hot market, right? Yeah. So, or maybe chasing a tiny interest rate instead of thinking of how a payment might apply to your life, right? Like, I don't want to lock in 6.5 and waiting for 6.25, even though you should be worried about how it fits your budget, right?
That's right.
So what happened is, as you're talking about rates moving down, the Federal Reserve lowered its policy rate to 4 and 4 to 4.25, and mortgage rates eased, right? Roughly, I think they got down to around 6.25, 6.26, somewhere in that range. And those lower borrowing costs, consumers should start looking at, lower borrowing costs. Maybe I should go look for that house or start down that lane, right?
Absolutely.
So that's going to push housing activity higher. And when rates fall, a lot of people will anchor on, yesterday's annual percentage rate, or APY, and freeze. And that's how banks on your savings account, will sneak in that pay cut. You'll see the interest they're paying go down. Not like they're paying a lot now anyway, unless you're in a money market, right?
That's right.
You'll get a pay cut there. So consider, keeping a couple buckets here. If you want to have cash and you need cash to sleep at night, you obviously need your emergency fund in case something happens. But if you still need more cash beyond your emergency fund, think of it as like working cash, right? Cash you're going to put to work, looking for better opportunities for return moving forward, not just sitting there going, hey, I'm still getting 5% on my cash, because that's not the reality anymore, is it?
It's not, no, Travis. And you spoke about new home sales going up. New home sales jumped in August, about 800,000 homes annualized, up 20% a month. That's pretty, up 20% in that month.
But in that case, consumers they're front running it, right?
Absolutely, yeah, they are. As mortgage rates ease and builders are, sweetening deals here. Here are a few things that we can do to help home buyers and homeowners stay ready. Get pre-approved and keep your docs refreshed. Sellers will reward certainty,
the ability to transact quickly.
Absolutely, and you buy. You mentioned earlier, you buy the payment, not the rate. You have to stay within your budget. Lock in a payment that fits your budget today. If rates do drift lower, obviously you can refinance at a later point.
So don't let it paralyze you, is what you're saying, right?
Exactly
like if the house you want or an opportunity comes up, if you can transact, think about transacting, because if rates do drift lower, you can refi.
Because when you look at this, and we can expect more inventory and incentives, I believe, even though we've dropped 25 basis points and there's more cuts, that people are going to wait.
Yeah, because, cuts affect the short end of the curve, right? Correct. That doesn't mean mortgage rates are coming down in lockstep.
That's right. Yeah. Yep. And so builders are dealing rate buy downs, and price flexibility is back. So the buyer is in the driver's seat again. And as these financing costs ease, you're going to see more buyers come to the table for sure.
Yeah. So bottom line here, Steve, don't let your brain anchor on yesterday's yields and become complacent. The world has shifted. Cash payouts here are likely going to drift lower. Yep. Borrowing costs, should get cheaper here moving forward, and that will give housing a tailwind. If you want help cutting through the noise of something as simple as rate cuts and how it affects your cash and what you've been doing, should I move off the sideline? Should I not? What should I think about now? Reach out to one of us, one of the advisors at Allen Capital Group, and we'll be happy to help you navigate that environment.
Absolutely agree. Travis, has been great. I look forward to it next week.
Look forward to it as well.